Laura, thanks so much for being here.
Thanks for having me.
So I want to talk about the proposed foreign currency regulations. They were issued in November, and then in December, the government issued a correction. Talk about that proposed guidance, the correction, and what the implications are, as well as what actions companies need to take.
Oh, of course. Great question. Yes, so they came out with a correction, actually, because of the confusion on the applicability dates, which I think is probably one of the biggest pieces, because you get this new guidance, and then companies are going, well, when does it apply to me? And so they did come out in proposed form, but if it goes final as proposed, it would be applicable to taxpayers starting in January 1st of 2025 for calendar year taxpayers.
Okay.
However, as we've been chatting with some companies in terms of like, what does it mean now? There is a retroactive piece to that. So if a company ends up terminating a QBU sometime between in November when the regs came out and when they become final, during that interim period, if you terminate a QBU, the rules actually apply. The rules, meaning these new regulations, apply to that termination gain or loss. And so that's something we've been talking to a lot of companies about to make sure they're aware of that, because that can potentially change the amount and the timing of that gain or loss. And then the other piece, kind of some other highlights that we've been chatting with companies about, is thinking about some of the new elections that are available, because now you've got these new regulations that have a default rule in them as to this is how you're going to compute 987 gain or loss. But the government did hear that that default rule, they call it the FEAT method, can be complex. And so they came out and said, we heard you, taxpayers, this could be complex. Tracking historic rates under our default method is a lot. They gave some elections that simplify it. So a lot of companies need to think about what elections, if any, that they make, or do they stick with the default rule. So there's a lot of modeling that's going on right now. And then another key piece is companies are always active and doing reorganizations or legal entity rationalization plans. And so if they end up doing certain transactions like terminating the QBU and now triggering these rules early, or potentially eliminating some of the owners. So in the 987 rules, you have an owner and you have a QBU, and the owner has the 987 gain or loss. If you end up inbounding an owner, or you end up liquidating in like a 331 liquidation the owner, and that owner has certain losses, they call them suspended losses, those losses can just disappear, never to be recognized. So a lot of the things we've been dealing with is just making people aware that these can apply now, and they need to be aware of that as they're doing planning today.
Okay, let me ask a follow-up about the modeling, because I feel like this is an obvious question to ask about modeling. Is it a heavy lift when they're modeling out? So what's involved?
It is. So now when they're modeling, it means pulling, like, basically if you've got, well, there's two types, I'll put it in two buckets. You've got taxpayers that have existing methodologies and they have existing 987 computations. So what they're doing is just figuring out, based on what I have today, if I transition, what does it look like?
Right.
Other companies maybe have not done anything, and so they need to kind of rebuild pools. And so the first step for them is going back in time to the inception of the QBU and rebuilding like a basis, essentially, for 987 purposes. So that can be an undertaking. It's pulling data for like your trial balances since inception. So you've got your balance sheets and your taxable income that you need to compute and translate correctly. And so a lot of times it's, where am I going to get this information? Balance sheets, trial balances. And then in terms of translation rates, what translation rates am I going to use for each of the items on the balance sheet, and where do I find that? And so it can be a huge undertaking for companies.
Okay. All right. So to wrap up, let me find out from you. I know you are immersed in financial products, so let's find out about other pieces of guidance that our viewers should be aware of.
Yes. Well, I think if you look at my calendar and the day-to-day, you'd probably think it's all 987. But yes, there is still other transactions happening. And so a couple things we're seeing are taxpayers are taking care of their 23 returns right now and preparing them. And if they have Turkey as one of their where they operate, they could have DASTM, which is a special rule for how you account for Turkish operations. So if you have entities that are operating in the Turkish lira, these new DASTM rules start to apply for your 23 returns. So we're getting lots of questions on how do I do this calculation and what do I put on my tax return. And then because of the volatility that we're seeing with interest rates going up and then volatility in FX exchange rates, we're seeing a lot more companies looking at hedging or maybe monetizing some of their hedges that have built-in gains to get the cash, and then wondering, if I terminate this to get the cash, what does that mean for tax purposes and reporting? With interest rates going up, how do I end up kind of not being limited in my expenses and coming up with ways to possibly capitalize interest. Those are all different things we're seeing in terms of kind of planning and talking to companies about.
So a lot of intricate pieces involved here.
Very much so.
Okay. All right, Laura, thank you so much. Really appreciate it.
Anytime. Thank you for having me.